I've been in the real estate business now for over 20 years, buying and selling many properties for myself and family members. Plus, I've helped over 1,000 families buy and sell homes in San Diego County. And today, I'm going to share 3 or maybe 4 things that I wish I knew before buying my first place. There's a ton of mistakes that people can make when they buy property. Many times they're just following the path that they think they need to take. And today, my job's going to be to help you avoid the mistakes that I made. Also, I'm going to share some of the tips for my clients that I've helped. Those clients that have had a ton of success with their home purchases through the years. You know, success, it can be a relative term, right? Well, success to me is being able to own property and to have it be something that you actually love. All the while, it appreciates in value, or it could even cash flow for you if it's an investment property. A property that creates family wealth in a way that your regular job can't. That is what I would have liked to have done when I started out with my first property, and it didn't go exactly the way I wanted because I didn't know what I was doing. I was really green to the whole process, and I was kind of going with the flow of what I thought I was supposed to be doing. I was young, and like I said, I didn't know what the heck was going on. And despite the good advice that I had, I did make some mistakes. And here are the 4 things that I wish I would have known, things that would have helped me with my own property ownership journey. Now, I know these things would have helped me be more successful, faster, right out of the gate, make a bit more money, but also maybe have helped me not be so careless when I was starting out. First of all, it is a big investment to buy your home. You've worked really hard to save up your down payment and some closing costs, and then take that leap of faith and put all your eggs into one basket. So here are those 4 things I wish I could go back and tell myself about buying property that would have made it a whole lot easier. Number 1, know your finances, like your bills, taxes, cost of living, savings, and then look at what you can qualify for with your mortgage. See, before you even go out and look at homes, you need to get pre-qualified for financing. That way, you know your budget. And remember, when your lender tells you what your max qualifying amount is, do not go there if you're not comfortable. So I encourage you to actually dial back your purchase price amount. You do not want to be house poor, where all you can afford is soup and Netflix. No, you want to be able to live your life and do your hobbies and put away money for savings, unexpected surprises, and retirement. So owning a home, it's going to cost you more than renting. And you're going to have those projects that you want to take on around the house, things that are going to need to be replaced and updated all through the years. All these things that you've relied on that landlord to do are now, they're going to be on your shoulders. Well, utilities, you know they keep going up, and do not forget about costs like homeowners insurance and property taxes. So determining your budget before you look at homes really is number 1. And keeping under your max purchase price amount is gonna help you in the long run. And guys, this is the number 2 thing. Chances are you're gonna be buying a few homes throughout your lifetime. Think of them as stepping stones. When I first started out, like a lot of my clients, you think that you're buying your dream forever home. You've got this list of wants and needs, and guys, you're picky on features, location, configuration, and price. Well, here is the secret about starting out. Buy whatever you can afford in a decent neighborhood, and don't get too caught up on the rest. If you are in a high appreciating market like where I live here in San Diego, you're riding an appreciation wave, because the property values in San Diego, they tend to double every 7 to 10 years. So if you're like most folks, you're probably going to be in your place anywhere from 5 to 10 years. You're going to see a healthy amount of appreciation, and then life happens. Your family's going to need a bigger place, or maybe you'll get a job transfer and you'll end up moving. So your first few homes, they don't have to have must-have features that you really think you need now. You may have even heard this before, but it's worth repeating. Buy the ugly house in the best neighborhood you can. Create sweat equity by making the property nice while you live there. This strategy assures that you're going to get the best return on your investment. And this brings me to number 3. Don't sell real estate. Yep, a 20-plus year veteran realtor just told you not to sell. Hey, maybe I am putting myself out of a job here, but hear me out. Knowing that property values tend to double every 7 to 10 years, at least here in San Diego, I wish I would have turned every single one of my homes into rentals instead of selling and using the equity to buy the next one. Now, I know it's hard not to look at that equity gain after a handful of years of ownership and think about using it to get into something else, especially when you play that game right. Remember, ugly house in the best neighborhood that you can afford comfortably. Couple that with the appreciation in the market over time. Now, if you were like I was, you'd be tempted to sell and take the money and run, but don't. Turn that property into a rental and go out and do it all over again. If you can manage to do it without refinancing the home you bought along the way, even better. For example, my first place was $225,000. Now, the payment on that was around $1,500. And today it's worth well over $650,000, and it would rent for about $3,000 a month. Guys, that's a $1,500 a month cash flow, and it would be close to being paid off by now. Yep, I'm kicking myself for being inexperienced back then, something that you can learn now. Here is the biggest game changer I wish I would have done way back when. I didn't need that cute townhouse with the yard when I started out. What I needed was a duplex, triplex, or even a fourplex. And here's why. I could have used the same financing as I did to buy that cute townhome, an FHA loan with 3.5% down payment. And instead of just buying that one unit, I could have bought up to 4 and use the other 3 to offset my payment. This, my friends, is what we call leverage, where you use as little out of pocket as possible to control the largest asset possible. And when you do buy as an owner occupant, you can get in with very little down payment. FHA is 3.5%. Now, VA, that's 0, and conventional financing would be anywhere from 3 to 20% down. You pick. So the game completely changes. You move into one of the units in your property, hang out there for a few years, and then either do it all over again with another multi-unit, or if you want, go get yourself that cute townhouse or even the single family home. Because if you go get that townhome first, like I did, well, as a non-owner occupant buyer on an investment property, it's going to cost you a minimum of 20% down. Ouch. For example, to keep the numbers easy, you go buy a multi-unit for $1 million, which you still can do here in San Diego. Now, as an owner-occupant, you're going to need $35,000 down with FHA using that 3.5% down payment program. Now, compared to $200,000 down as a non-owner occupant investor. Big difference, guys. Remember, as an owner occupant buyer, you're going to be able to have these benefits where you can use the rents in the property to count towards your income and qualifying. Lenders allow those rents to offset that higher purchase price. Now, I said I was going to cover 4 things, but I really want to offer up one more for you. Buy anything that you can start with. Really, if you don't own any property right now, just set the goal of buying at least one to get started. If you're renting, you're still paying a mortgage, only it's for your landlord and not your own. So if you do live in a highly appreciating market like San Diego, well, I don't want you to get priced out of the market because you sat on the fence for too long. Remember, property appreciates in value over the long haul, and this is a get-rich-slow plan, one that creates family wealth in a way that most regular 9-to-5 jobs can't. Guys, growth takes time, and patience is going to be key. Learning from others' mistakes and successes are going to help accelerate you on this journey. Not only do we give you valuable tips on this channel, we want to earn your business. So when you are ready to make a move, buy or sell a home or an investment property, we want to be top of mind for you, your go-to resource in San Diego or any other part of the country. And that's because we have a network of amazing, like-minded, seasoned realtors across the nation. And we can have them help guide you with your next transaction. All you've got to do is reach out to us to get started. Thanks, and we'll see you on the next video. Bye now.